All right, let's dive right into something pretty unexpected today.
Mhm.
Imagine one of the world's most prestigious, financially conservative institutions, Harvard University,
Yeah.
suddenly making a significant leap into the world of Bitcoin.
It's quite something, isn't it?
Yeah.
Our sources are detailing this substantial investment by Harvard University. Specifically, it's their Harvard Management Company, HMC. And like you said, this isn't just a small experimental thing. It feels calculated. It speaks volumes.
Absolutely. So for this deep dive, our mission really is to understand not just the what the actual Bitcoin holdings, but more importantly, the why and the how.
Mhm.
We want to try and uncover the strategic thinking here,
Right.
and what does it signal for, well, for the whole financial landscape? Because honestly, this isn't just about Harvard's balance sheet. This feels like a shift in perception for
Mhm.
crypto, right? Moving from just pure speculation to maybe a legitimate part of big portfolios.
Yeah, exactly.
But what is it about this investment specifically that makes it seem different from maybe smaller things they did before? Why does this send a clearer signal?
That's really the core question. In the past, institutional crypto plays were often smaller, maybe more exploratory or kind of hidden in private funds. But the scale we're talking about now and the way they did it, the vehicle they chose, that's what really grabs your attention.
Okay, so let's unpack that headline-grabbing investment then. The big number you need to know. Harvard, through HMC, now holds, get this, $116 million worth of Bitcoin.
Wow. And the vehicle, as you mentioned, is key. They've done it using 1.9 million shares of the iShares Bitcoin Trust. That's IBOB from BlackRock. This is an ETF, an exchange-traded fund launched just this past January 2024. And it's already like the most successful Bitcoin fund out there, managing over, what, $86 billion in assets now?
Right, 86 billion. And just to give everyone some scale here, Harvard's endowment, it's the biggest in the US. We're talking about $53.2 billion
Yeah.
as of June 30, 2024. So this $116 million Bitcoin investment, it represents about 8% of their reported public securities portfolio. That part of their portfolio totals over $1.4 billion. And when you look at those public holdings, the Bitcoin slice is actually, well, it's their fifth largest public holding. It's even bigger than their stake in Alphabet, Google's parent company, by about $3 million. This was all reported to the SEC, the Securities and Exchange Commission, on August 8th, 2025. So what does that 8% tell us about their risk tolerance now compared to, say, 5 years ago?
Well, it definitely signals they're moving past just dipping a toe in. That 8% of the public securities part sounds big, and it is significant for that slice. But remember, it's still a carefully managed piece of that enormous overall $53 billion endowment. It suggests, I think, growing confidence, not just in Bitcoin itself, maybe, but in the whole infrastructure now available to hold it securely and legally. This isn't some small player taking a flyer. It's a calculated, pretty substantial step for an institution like Harvard, known for being cautious.
And what's really interesting maybe is that this isn't totally out of the blue for them. Harvard's engagement with crypto, it's not brand new. Our sources show that way back in 2018, Harvard and actually other big names like Stanford, MIT, Dartmouth, University of North Carolina, they'd already put money into at least one crypto fund.
That's right. And they even did some direct token investing. In 2019, HMC got involved in an ICO, an initial coin offering for Blockstack. They bought about 95.8 million Stacks tokens. The estimate was around $11.5 million back then. Now, that was a much smaller piece of the pie, less than 0.05% of the total endowment at the time.
Okay, but wait, there's even more, isn't there? Reports also suggest Harvard's been buying Bitcoin directly, like on exchanges since 2019, and other Ivies too, like Yale and Brown. So if you connect those dots, yeah, it's not a sudden jump. It looks more like an evolution, right? They've been feeling this out for years, refining how they approach this whole new asset class. But for this kind of scale, the $116 million, why the ETF route now? Why not just keep buying direct?
Yeah, that's a great question. And it really hits on how institutional access has changed dramatically. What's fascinating, I think, is that choosing the ETF simplifies so much for them. It lets institutions like Harvard get Bitcoin exposure without actually having to, hold the private keys, worry about the custody, manage the physical, the digital asset itself.
Right. And the benefits there are huge for an institution, aren't they? The ETFs, they offer regulatory oversight. They solve those big headaches around storage and security. For an endowment that absolutely requires, secure, transparent ways to invest, that's just paramount. And the SEC approving those Bitcoin ETFs back in January 2024, that really just opened the floodgates, didn't it? It lowered the barrier significantly, made this kind of large regulated investment actually feasible. Exactly. It was a game changer. And if we zoom out a bit, look at the bigger picture. Harvard isn't alone here. They're not an anomaly. You mentioned Brown University. They've also put, what, $13 million into that same BlackRock ETF, IBT. And Emory University, they bought shares in the Grayscale Bitcoin Mini Trust, about 2.7 million shares valued over $15 million in 2024.
Wow, okay.
Even state pension funds are getting in. The state of Michigan's pension fund, for instance, reportedly tripled its Bitcoin investment using an ETF, reaching around $11 million.
So yeah, these examples, they're not just one-offs. It really does indicate a broader trend, doesn't it? A growing acceptance among institutions that Bitcoin can be a legitimate part of a diversified portfolio. It's moving out of the fringes. It's becoming a calculated piece of the strategy for major players. So beyond just the numbers and the mechanics, what's the strategic why? What are the real motivations here? Well, there are several key drivers, I think. First and foremost is probably diversification. Bitcoin is often viewed as an asset that doesn't move perfectly in sync with traditional markets like stocks and bonds. So adding it could potentially help reduce overall portfolio risk.
That's the classic diversification argument, right? And this growing acceptance we're talking about, the SEC approval of those ETFs in January, that looms large again, doesn't it? It just greased the wheels, dealt with those big security and custody worries that kept institutions on the sidelines for so long.
Absolutely.
Plus, let's be honest, despite the crazy volatility, Bitcoin has shown potential for serious appreciation. You see periods like Bloomberg reported a 25% gain in just April 2019, so the upside potential is there.
Definitely. And then there's also the technology aspect. The investment isn't just about the coin. It reflects a wider interest in the underlying blockchain technology. Blockchain has potential applications way beyond just finance. It's seen as a major technological innovation. So putting it all together, diversification, easier access via ETFs, potential growth, and the tech itself. Those are the strategic drivers.
Okay, but we have to talk about the flip side. It's not all smooth sailing. There are significant risks, criticisms, ongoing challenges. I mean, the volatility is the big one, right? Bitcoin's history is full of massive drops, up to 75% from historical highs sometimes. That's a serious risk for any investor, let alone a university endowment.
Oh, absolutely. That volatility is inherent. And while the ETFs provide a regulated wrapper, the underlying regulatory landscape for crypto itself is still uncertain. Policies can change, and that could impact Bitcoin's value or how easily institutions can access it. Which, raises that crucial question. How do these big players balance the potential rewards against these very real risks in a market that's still evolving so quickly?
And there are experts warning about concentration, too. I saw a note about Ronald Glantz, an advisor at Pantera, suggesting maybe blockchain investments shouldn't exceed, like, 2% of a portfolio to manage risk. Harvard's 8% in their public securities portfolio for just Bitcoin. That seems like a significantly bolder move than that 2% guideline.
It is bolder, relatively speaking, within that specific slice of assets. It shows a higher conviction, perhaps.
And then there's the reputation risk, isn't there? For a place like Harvard, investing heavily in something still seen by many as, speculative, what happens if there's a major crash? The public scrutiny could be intense.
For sure. Looking ahead, the challenges are clear. Managing that ongoing volatility is number one. Ensuring it actually provides effective diversification without destabilizing the whole portfolio. Dealing with public and potentially alumni scrutiny. Adapting if or when the regulations change again. And just staying on top of the incredibly fast pace of innovation in blockchain and crypto generally. It's a lot to manage.
Right.
So let's try to bring it all together then. Harvard's $116 million investment in Bitcoin, mostly through that BlackRock ETF, it feels like a real milestone, doesn't it, for institutional crypto acceptance. It shows a calculated strategy diversification, leveraging this new trusted regulatory structure of the ETFs. And while, it's a calculated risk and still a fraction of their total massive endowment, this move, especially alongside what Brown, Emory, and others are doing, it really signals Bitcoin shifting from the edge towards the mainstream for big financial players.
Exactly. What really stands out, I think, is that this isn't just about Harvard's finances. When you dig into it like this, you see it reflects a major shift in how these very established traditional financial powers are starting to view and interact with these new digital assets. It genuinely changes the conversation about what even counts as a legitimate investment these days. Yeah, really does. And that leads us to maybe a final provocative thought for you, the listener, to chew on after we wrap up. Could Harvard's move be a kind of bellwether, not just for for other institutions, but maybe for how we all think about the very definition of a stable long-term asset in the coming decades. Something to consider. How might this decision ripple outwards, influence other cautious institutions, and maybe further cement crypto's place, for better or worse, in the global financial system?